Small business is overpaying in tax by $11,000 every single year, $11,000 every year. And that's the average. I mean, some small businesses are going to be paying way more than that. That's over what they're supposed to pay. That's money that they're just giving away to the IRS. Can you imagine having $11,000 or more every year that is just found money that you've just been sending off to the IRS without getting anything in return for it? And it totally backs up everything that I see day to day in talking with business owners. They're missing deductions. They don't have the right entity structures. They're missing out on opportunities to build wealth in a way that is tax advantaged. And just the big thought, and I guess what I wanted to share is I think the biggest area where most business owners could just, without changing anything dramatic, could just find lost money is in missed deductions. And that's by far not the only area that is needed for real tax planning. And often it's not even the most significant in terms of where we would see savings. But I think that we as CPAs are not always doing a great job of actually planning and counseling with our clients and helping them scrape up every possible deduction. The thing about the deductions is, yeah, maybe it's not like the sexiest strategy in the world, but it is just free money. It's money that you're spending anyway. And if you can figure out how to turn an expense from something that is not a deduction or that you're not claiming as a deduction into a deduction, that's just free money. It's free tax money. In fact, in tax plans that we've done for clients, the average amount that we can almost just guarantee that we can find in deductions that are there and available legally to business owners that they just hadn't thought to take or their CPA hadn't pointed out is $2,000 every year. So that's not the 11. There's other stuff that goes into that, but it's $2,000 that you don't even have to change anything. You just have to pick up these deductions that are sitting there. That's money that you're spending anyway that you're not deducting. And so that's what I wanted to talk about is why are these deductions missed most often? And really it comes down to two reasons. And the first one is usually truer for smaller business owners that aren't yet at the point where they have a really good bookkeeper or accountant. And it's just bad records. You're mixing all your personal finances with your business finances. At the end of the year, it's too hard to go pick out which one's which, and you might just miss totally legitimate deductions that are in there, but it's in there among thousands of other personal transactions and grocery receipts and things like that. And so they're just missed. So keep good records. And if you don't have a bookkeeper or can't do it yourself, I just guarantee you that even if you have to get a bookkeeper, you will, one, have better information to run your business if you can get good financial statements. Two, you can't get a loan if you ever need one without financial statements. And then three, the tax savings more than likely will pay for the bookkeeper. So, and then you get all those other benefits without having really any cost, net of tax savings. So keep good records. Make sure that you're checking that box. Then the other reason for those business owners who have graduated from that and have good records and are not outright just missing any expense, it usually comes down to not having a good understanding of what they can deduct and not really getting any good advice from the CPA maybe on what can be deducted. And in fact, I would say that for most business owners, the question you should be asking yourself on any large purchase is not, can I deduct this? But how can I deduct this? So you can deduct any expense that's ordinary and necessary to operate a business. And ordinary and necessary are both terms that have definitions. And if we can find a way to legally meet that definition, then we can legally deduct an item. And that doesn't always mean that you'll be deducting it through your main business. Maybe there's another way that we can deduct it. But there are so many things that can be deducted that if you're not constantly asking yourself that question about any major purchase, then you need to just reevaluate, I suppose. I'm standing here outside my cabin right now, and the cabin is something I deducted. Most everything that's in the cabin is something I deducted. The four-wheeler that I ride when I leave the cabin, these are all things that I've paid for before I pay my taxes. And that is maybe one of the most hidden secrets that's out there, is that the IRS, not the IRS, frankly, the lawmakers, Congress, have created a system that incentivizes us to spend money, invest money, and if we know how to use the system to our advantage, we can take advantage of all the tax benefits that are available for those who are investors and business owners who are driving the economy forward. And that, I think, is probably the single biggest secret when it comes to deductions, is just that flipping that question around and going from, can I deduct this, to how can I deduct this? Because a lot of times I would say, usually, and might go as far as to say just about always, if you're motivated enough, there is a way to pay for almost anything in a way that makes it a legal deduction. So you don't want to pay taxes. You don't want to like have your income and then pay taxes. And then after you paid taxes on the higher income, then go buy your stuff and pay for expenses after tax. You want to have your income pile as much into expenses to shrink down the taxable income and then pay tax on that smaller amount after your expenses. So I guess just a couple things. First, if anyone has any questions on what they can deduct, put it in the comments. I'll read all the comments and make sure that we're answering any questions and helping you out. If you own a business and there's something that you want to deduct and just aren't sure if or how, put it in the comments. And, if they're good, maybe I'll make a follow-up video and just talk about some of those things and specifically how certain items might be deducted. And the other thing is we have a free handout that you can go download that is like a whole list of write-offs and things that you can write off, and just to get your juices going. So there's by no means is a definitive list that has everything that you can write off on it. It's more just to get your imagination going, to make sure that you're not overlooking anything obvious. But in general, flip that mindset and don't ask the question of if you can deduct something. Switch over and say, for anything that I'm buying that's a large purchase that's going to be worth my effort to go through it, let's figure out how to deduct it.